let's start with our seminar topic. We already had last month two speakers about economic considerations in energy storage, which was a quite intense discussion, a lot of things to talk about, and this is important that we open the discussion here. And I'm very happy that today we also have two experts. We have Oliver Schmidt, who wrote even a book about monetizing energy storage. So I'm super curious about his findings and approach. And after him, there is Matthias Leuthold from the company Trianel. So he has, of course, to be very careful about the economic consideration, as this is his daily business. And with this, I close the starting, and Mr. Schmidt, the stage is yours. Feel free to share your screen.
Perfect, yeah. First of all, yeah, hello everyone, and thank you very much, Stefanie, for inviting me to speak. And yeah, then I'll start directly, looking forward to discussion afterwards. So as mentioned by you, I would like to share some of the content from the book that I published earlier this year, Monetizing Energy Storage. And what I would like to do is, first, I would like to look at the type of value or applications energy storage can provide. Then I want to look at how can we quantify the cost for energy storage to provide the service or these services. And thirdly, if the cost of energy storage to provide this is lower than what the value is, what can still be done so that energy storage can support these applications. And maybe one note beforehand, everything that I've done here refers to electricity storage. So electricity in, electricity out, but the major concepts are also applicable to other ways, like heat storage, for example, where you discharge heat at the end. So happy to maybe also touch on that in the discussion. But first of all, let's look at what type of value, what type of applications energy storage can serve. And I'm not sure how you feel, but I usually get confused when I hear all of these different words like primary frequency response, dynamic containment, dynamic moderation, peak capacity, like so many words for these various applications. So I think a nice way to classify or categorize the applications energy storage can provide is, first of all, along the dimension of where in the power system will I provide an application? Is it on a generation side, on a consumption side, or somewhere in the network? And second, and we may more generally refer to this as front of the meter and behind the meter. And second of all, what's the type of economic value my energy storage system can provide? The first one being power quality, making sure we always meet the very high standards that our electricity systems or our machines require. The second one is power reliability, making sure we have electricity, in this case, available at all times. Third is increasing utilization of existing assets, making sure they run at the highest efficiency levels. And thirdly, arbitraging between price differentials to make money. So let's start. If we look at the first category, power quality, we could say there are services which I would call renewables smoothing, making sure the output of our renewable generators meets the very high requirements of our electricity grid. We could have frequency regulation, voltage support, inertia services, again, to keep stability or keep our electricity network stable. Or we could have it on the consumer side, power quality, making sure the electricity meets the very high requirements of our machines in the factory. The next one, in power reliability, we could deploy energy storage on the generation side to ensure we meet peak demand at all times, peak capacity, black start capability in case of an outage. In the network, we have various types of reserves ranging from second or minute timelines to seasonal storage, so to ensure power is reliable at all times. And at home or in factories, we could have backup power in case of an outage, or we could just make sure we have electricity available at all times with power reliability. We could increase the utilization of dispatchable generators through load following, making sure our gas or coal-fired power stations run at their highest efficiency levels at all times. We could ensure renewables don't get constrained with energy storage. In the power network, we could ensure there's no congestion, or we could defer transmission and distribution investments. Or on the consumer side, we could make sure that our demand charges are reduced so that the use of the power network is optimized in that sense, or increase self-consumption and thereby optimize the use of our residential PV. And lastly, various arbitrage applications through co-location with renewables, for example, but also if we just trade on the wholesale market, or if there's a retail market, or we just optimize any time of use prices we see if there's a time of use. So lots of service, but I think a nice way to sort of categorize them in terms of where in the power system, what's the value that's provided. There's a third dimension that's interesting to look at, which is the relation to the deployment of variable renewables, meaning if there's a direct relation, these services or the demand for these services will probably increase in the future. If there's an indirect or no relation, then the demand for these services may stay the same, so just as an indication. Okay, so next let's look at how can we quantify the cost of energy storage to provide these applications. And here what we need to do is we need to determine the lifetime cost. So one lifetime cost parameter is the levelized cost of storage, which basically divides all the costs of a storage system throughout its lifetime over all the energy that is discharged throughout the lifetime. And what's very important is these lifetime costs always need to be determined application specific, like how many cycles per year. That's something that needs to be included here. And what you would determine here is basically the cost at which the storage system will discharge a megawatt hour of electricity. It could also be a kilowatt hour of electricity. And that's basically the benchmark, because if you earn more than what that cost is, your project is likely to be profitable. So sort of in terms of project economics, an important or interesting parameter, but also it really puts all systems on the same benchmark. So it's great to compare different electricity storage technologies in one application to see which one has the lowest cost of energy storage. So let's put this to practice. What I've done here is I've calculated the levelized cost of storage for a pumped hydro system in an application that I will call now peak capacity. More importantly, it has 300 cycles per year, where it discharges for 4 hours per cycle. And the specifications are on the right. So I've assumed a 100 megawatt, 400 megawatt hour system. The capex is around $300 per kilowatt hour, 80% efficiency, 50 years lifetime, 8% discount rate. So this pumped hydro system will discharge electricity at $180 per megawatt hour. Now, I would like to do this for all possible applications there are. And I'm going to do that on the next slide. So on the next slide, you can see on the y-axis the discharge duration of any possible application, ranging from below 1 hour up to 1,000 hours. And on the x-axis, the annual cycles of any possible application, ranging from 1 cycle per year up to 10,000 cycles a year. So if we orient ourselves again, we were looking at peak capacity on the slide before, which had 4 hours discharge duration, 300 cycles. So it's sitting here. And what we see, yes, we are in the range of $150 to $250 per megawatt hour. On the previous slides, we were in that range with $180 per megawatt hour. So a general trend that we can see is that we reduce the cost when we move from the bottom left to the top right. And that is because we're increasing our utilization, right? On the bottom left here, we would have a system that discharges only for 15 minutes and only does this 10 times a year. So it's only active for 2.5 hours per year. On the top right, we have a system that discharges for more than 40 hours, does that by 300 times per year. So it basically operates the entire year. And that's when we have the lowest cost. Yeah, and that confirmed, that's kind of the theoretical confirmation that the more we operate our system, the lower the lifetime cost will be. And why is that? That's because levelized cost of storage, you're paid for discharging energy. So if I have a system and I add more energy capacity, that means I directly increase my denominator, which is the amount of energy that I discharge per year, but the total cost of the system only increases partially because I only add my energy specific cost component. And that's why the system, the costs reduce if I go to longer discharge durations. And the same happens with cycles. If I have more cycles per year, I operate my system more, capital efficiency improves because for the capacity that I've bought and that I've deployed, I discharge more energy per year. If I look at annualized capacity cost, which is also a lifetime cost metric, but here I'm basically paid for being available to provide power, something I need to do in frequency response services, for example. It's the other way around. Here, the cheapest applications are where I have very few discharge or very small amounts of discharge duration and few cycles per year. And that's simply because I'm paid for being able to provide power. If I now need to add more energy so I can provide that for longer, that increases my cost. So of course the service needs to pay for that, but it increases my cost because yeah. And the same as if I have more cycles per year. What happens is I can still provide the same power, but because I have more cycles per year, I degrade faster. So the cost to provide the power suddenly increases. A common service that I'd already mentioned would be frequency regulation. It would sit here at around half an hour discharge duration and 300 cycles per year. And we would be in the cost range of $65 to $100 per kilowatt per year. So I would like to take that now to come to the third part of this talk, which is how do the costs of energy storage to provide a certain service compare to the value of the service. So let's take Germany as an example. If we look at the German frequency regulation market, Primärregelleistung, what we have seen already in the last decade was that the prices for the service were above 100 euros per kilowatt per year. However, these prices have reduced gradually the more battery storage capacity was deployed into the service, and the prices basically have fallen to below 100 euros per kilowatt per year after 2018, when we had more than 400 megawatt of battery capacity in that market, and that market is just 700 megawatts large in terms of size. So what we can see here, I have calculated this annualized capacity cost for lithium-ion battery system, and the cost is around about $85 per kilowatt per year. Yeah, and euro dollar, it's not such a big difference since a few years. And what we basically see is the value for the service has converged to the cost of battery storage systems to provide the service over time, because this market is very shallow. It's a small market, just 700 megawatts, and it's saturated with battery storage capacity. So what many energy storage project developers do now, they look to a much more attractive market, a much larger, much more liquid and deep market, which is arbitrage. So here what we can see is the price curve for the German day-ahead wholesale market. And what I've modeled here is the optimal operation of a storage system. The specifications are given here again. It's a lithium-ion battery system. And what it shows is that the system would earn $100 per megawatt hour if in 2022 it only operated on the German day-ahead wholesale market. Now again, let's compare this to the levelized cost of the service. Yeah, if we look at that and we model it with the key assumptions of $350 per kilowatt hour capacity in terms of capex cost, and then yeah, the other assumptions that are listed here, we would arrive at a levelized cost of storage of $140 per megawatt hour. So that's really not ideal because again, it's not a very profitable business case. So hard time for energy storage project developers, because the shallow markets that have been lucrative are not that lucrative anymore, and the big interesting market is not lucrative yet because either storage costs are not low enough or the price volatility on the market is not high enough. So what can you do now? what can you do now is you can try to stack different revenues. Conceptually displayed here, I have my lifetime cost. I need to be higher than that with my lifetime revenues. If I just have one application like arbitrage on the previous slide, my lifetime revenues might not be sufficient. But what I could do is I could maybe just pick the most lucrative times in the German wholesale market and trade them, and not have the full potential of arbitrage on the wholesale market, but small potential with the most lucrative periods of price differentials. That allows me, or then I have lots of other cycles left per year where I can provide other services. For example, frequency regulation. So that's application 2. And then maybe there's even a third application where I still have cycles that I can put into, and that will lift my lifetime revenues over my threshold. And because I have the impression everyone says something or means something different when speaking about revenue stacking, I've brought with my last 4 slides 4 sort of archetypes, how you can stack revenues. And I would like to share examples from the UK, how that can be done to exemplify that. So the first approach to stack different revenues would be sequential stacking, because you would period 2 provide for application 1, then you would recharge, and then period 4 you would provide for application 2. So that's probably the most intuitive way of stacking revenues in 1 year, by providing for 2 different applications at different time periods. And in fact, this was already clear or already visible in the first major deployment of battery technologies in the UK in 2016 for the enhanced frequency response tender. So here batteries were asked to bid to provide frequency response, ideally for the entire year. But there were selected batteries that you could see didn't ensure to provide that service for the entire year. They were excluding around about 100 hours per year to do something else. And they were planning in that year to provide triad service, which meant that if you match, or if you don't consume electricity as a consumer, as an industrial consumer, in the 3 half-hour periods per year where demand is the highest, you don't need to pay any network charges. So batteries could try to discharge at that time, so you don't consume any electricity at that time, and reduce your network charges to 0. And that's what these batteries, few batteries that bid into enhanced frequency regulation, reserved their time to provide this. Next archetype would be when you're actually paid for recharging. So yeah, you could call this a sub-archetype from sequential stacking, but you basically provide application 1 and period 2 and period 4. But when recharging in period 3, you even paid for doing that. And that's actually allowed, or it's specifically encouraged by National Grid with their dynamic containment services. So you're allowed to bid for dynamic containment. But then if you have provided this service, you can also bid into the balancing mechanism to, and I quote, manage your state of charge levels. So in this case, you could even be paid to recharge your battery. And the third archetype for revenue stacking would be parallel stacking. So you basically split your power capacity, and in this case, 10 megawatts you provide to application 1, and another 10 megawatts you provide to application 2. That's what you could do. For example, you could reserve some capacity for dynamic regulation, and then the remaining capacity you trade on the wholesale market. Battery optimizers will also know the strategy from managing a portfolio of batteries, where 1/2 of your batteries you bid into one market, 1/2 of the other half you bid into another market, simply to hedge your risks as well. And the last type of revenue stacking would be to provide for 2 applications at the same time and be paid for both. I know this sounds too good to be true, but for completeness, we should mention it because it does exist. We have it, for example, with the so-called capacity market in the UK, where you paid for bringing capacity online, and then you're also obliged to be available at a capacity event. And when you provided firm frequency response, I mean, the service has been retired now, but it was explicitly said that if you provided frequency response at the time of a capacity event, that's fine. Like you can keep the money for the capacity market. So that's a way of sort of overlap stacking, where you get paid for two services. And that brings me to the end of my slides. As mentioned by Stephanie, this book, Monetizing Energy Storage, is published. It's actually for free as a PDF. You could let me know if you want a hard copy. I can give you a discount code. And here there are more insights, or more detail on the insights we've developed, and especially also the methodology we applied to kind of look at the cost and value for energy storage. And there's also a website called the Energy Storage Ninja. And the idea here is that it's a user-friendly tool where you can actually use the methods we've developed with your own input assumptions, and thereby create sort of similar type output graphs, and refer back to the methods of the book, but use your own assumptions. And I wanted to use the last minute to briefly demonstrate that. If I manage to go around the Zoom bar on top. So you can go to this website. There's a difference between the free version and the pro version, but you could put in a code. I'm giving you a code for today that you can also use for the rest of the day. And then, for example, we could look at these landscape charts. I was using the cost version of these in my presentation, but there's also a nice colorful version where you can see which technology is best in what sort of discharge duration and frequency regimes. What you can now do is you can actually, for example, let's assume we have a flow battery. What values did we use to model that? Maybe someone tells you they can build a flow battery for much cheaper. And so I'm entering these values. If we look at the right, the yellow bit is the flow battery. It's just competitive at 500 to 1,000 cycles, below 1 hour of discharge duration. If you now save these new values, run it again, we could see what would happen if we had more competitive flow batteries. Suddenly flow batteries are the most competitive technology. Just one way to demonstrate the tool. And that brings me to the end of my presentation. And looking forward if there are any questions.
Okay, so many thanks. This was a very brief overview of very important parameters to think about. So I have to say, for me, I'm also more from the technical side and not from the economics. So this is always good to have a good overview. Guess I'm not speaking for myself alone here in this audience. I really like also the tool you just showed. Maybe if you want, you can also give the link in the chat or something if it was too fast for someone.
Yes.
To follow up. So okay, I will give the audience the possibility to ask a question. Let's see. I have no question here. So then I maybe take the chance and ask, maybe someone will come up with a question later. As I said, I'm more familiar with the technical things. Nevertheless, the question which comes to mind, maybe you answered in the end, but in the beginning you said, of course, you have to consider the investment costs and all the other costs which you have to consider to build, for example, a battery storage. Now, I wondered, did you consider any efficient or any sensitivity study on the efficiency of different battery providers, for example, if you get the information? Because maybe if you give company A the same amount of material for the same money, they make a battery with an efficiency which is way better than company B. Maybe just because they have a different technology, a different settings, different parameter regulation, whatever. So I guess the efficiency of the technology must also change a lot at the end, the outcome, if it's worth it or not to use it.
Yeah. I mean, we've never looked company specific. what we've done in the past is look at learning rates. So how do the cost of different storage technologies reduce over time? I think you can also do that with efficiency. How do efficiencies increase over time? Here you could argue that we've done that indirectly because in the end you look at data points from the market, right? What are the prices for lithium-ion batteries, or what is the efficiency from different batteries? And you could argue that the most efficient companies survive, and these are the data points that we collect. So that's maybe my kind of driving around answer to your question.
Yes,
that's sort of indirectly considered.
Yeah, I think it's I think so too. It somehow it's get into. I was curious if there's a graph showing directly the connection, but yeah, thanks. So now we have a couple of questions, a lot of. I see how many we can do. I read just the first one out loud, so that is on the recording. It's from Matthew. He asked, how do you think these strategies would scale? Would they be effective if there were many operators trying the strategies, or would this drive down the price of the serve and hence harm profits?
Yeah. I mean, nice formulation, harm profits. In the end, you know, it means it works for the greater good, and our system is managed more cost effectively. I think to answer the question, it really depends on the market you're looking at. So, for example, now if you look at the UK, everyone does stacking, but everyone does it differently. So it's because there are so many different services, no one has the holy grail of what gives you the most profit. Some companies are really active on the balancing mechanism. Some are quite active really on the wholesale market. Some are still mostly active in dynamic containment, dynamic moderation. So you could assume that there might be effects where most companies follow the same strategy. And yes, then it obviously will make an impact depending on the size of the market. It takes a while for the wholesale market to see an impact there. But at the moment, it's still so diverse that there's no impact on revenues, I would say.
Okay, so I think it's answered. If not, maybe you can have contact in the chat as well.
Yeah.
So another question is from Esther. She asked, are the tools in the book and on the website also applicable for thermal storage?
Yeah, that's what I briefly mentioned in the beginning, and it's all done for electricity storage. But the key concepts, for example, levelized cost of storage, I don't see any reason why they shouldn't be applicable to thermal storage as well. I just put in my dominator what I want, right? The amount of heat and at how many cycles I have to provide that heat. So I don't think you can use it one-on-one, but you could use it as a template to produce the respective.
Yeah, I fully agree. I think many things are quite similar. They're only, I mean, of course, the economic part is should be in line. I think the part which is missing then, which temperature level, like the big difference still is, if you talk about battery, it's clear you will use power. If you talk about thermal storage, you have to talk about if you have either the right temperature range. But if you somehow marry this together, I guess then it should be quite fine. Yes. And then the last question, and then I guess we move on. It's from Chris. He asked, one of the diagrams you had up on Renewable Ninja had flywheels as the most competitive option, but it seems to be the batteries are taking up a lot of the frequency market, certainly in the UK, he says. So suggests economics are not as good as BES. Can you see, so battery storage, I guess, can you see flywheels actually fulfilling their potential in high cycle type services? And how do we achieve this via market structure?
Yeah, just a brief answer, because I don't want to take too much time from Mr. Leuthold. Yes, the flywheels were there, but they were there above 5,000 full equivalent annual cycles per year. And I don't know any market that requires that at the moment. So answer would be, is there a market that requires that? And why isn't that market active yet? So then we should make sure we have such a market where you can bid into and get remunerated for having 500 full equivalent cycles per year. I guess the other way around is, what can we do with flywheels to become more competitive at maybe longer discharge duration of fewer cycles applications? I just know there's some activity in making larger flywheels. There's a company called Qnetic, written with a Q and a C at the end, who is trying to do that. And I've seen a couple of others as well.
Okay. Thank you very much.
Yeah, thank you very much for the great questions as well.
Yeah, thanks. And thanks for answering. Maybe if there's something coming up in the chat, you can have a look if possible. And okay, so thanks again. And we can open now the stage for Mr. Leuthold. So please excuse me a little bit late, but I guess we can take some extra 5 to 10 minutes at the end. And yeah, the stage is yours.
Will allow me. Can you hear me?
Yes.
Okay.
Yeah.
That's excellent. Hello, everybody. Hello, Stephanie. I'm very glad to be here. And it's a perfect match with what we just heard from Oliver about the way to calculate economics. And I want to basically assist from the side. What does the market do? What's happening at the moment? I'm sorry about the light. I have hard light from the top, so I look like a black worker all the time, but I'm trying. Maybe it's more important you hear me than you see me. First of all, I want to say where I come from. I have studied, or I've headed a research group at the University of Aachen, RWTH Aachen, at Professor Sauer. And so that's where I got familiar with system analysis in 2010 to 2015. I then changed to building battery storage systems, one at the university, 5 megawatts of frequency regulation. And then I actually built it in a commercial way. And today I work for Trianel, that is a joint venture of public utilities, Stadtwerke Kooperation in German. And we basically bundle the power of these relatively small utilities to get into markets that a single small utility wouldn't have the resources or the technological competence. And so what I want to speak about, sorry, my slides are all in German. We only work in the German market, but I'm going to translate. It's the market development of battery, a big battery storage and business models and costs. And I want to start with a motivation slide, even though I would think most of you are aware of it. This is the amount of renewable energy that has been generated in Germany. In red so far, and the historic data, and to the right in the colored lines, you see the different generation amounts in terms of terawatt hours expected in the until 2030. This is not 45. This is not 100% renewable. This is only in the next 7 years. So we see more than doubling. And what does that mean? It means the future of energy generation is fluctuating, and it's depending on the wind and the sun. And what does it mean in terms of time series? You see here, I suppose you all know what the colors mean. And you see in 2020, at any given time, we had plenty of fossil generation here in gray that would balance the renewables. And that is a fact. Gas was cheap, and you would always have a power plant running. But in 2025, and it already started this year, you will see that sometimes there would, in principle, be sufficient renewables to provide all electricity. And forgive me that the demand in magenta here is inelastic. Of course, it will be elastic in some way, but that's hard to predict. And so I also show what do we expect for 2030. And you see, at this stage, you have most regularly situations where you had enough electricity to supply the whole market. But the question is, for one, what does the price do? So the market design is really an open question. And second, how can I provide power to the remaining fossil or a gray market of electricity? And of course, I could use the temporal axis to put it in there, but I have to store it. And that's where we are. Let me introduce for a second Trianel. And I'm really going through this very fast because I think that's, you hear it and you know where it comes from, and that's it. Trianel, as I said, we are bundling the power of small utilities. We're not a utility ourselves. You see here the map of Germany. We have a few members in Netherlands, Switzerland, and Austria, but mostly in Germany. And you see somewhat, don't know why, this is where Trianel sits, all the way in the west. Our shareholders are somewhat focused in the west. And what we do is examples of things that we do that a single municipal or public utility wouldn't do. For example, we build a gas power plant, and we also have a gas storage, or we have big wind onshore and solar project development. And also we build 2 offshore wind parks. In total, we invest close to 2 billion. In the meantime, we have about 6 billion investments in major assets that a single utility from a mid-sized city couldn't handle. And so one of this kind of assets is battery storage. Now I'm going to shortly start from the beginning. Why do we discuss battery storage? Well, here are the components, and this is some of the reasons. What you need is a cooling container. You can also put it in a building, but that seems more expensive at the moment. So the trend is to modular storage units. This is one cooling container with batteries in it. You just suddenly have 6. And then you have a PCS, an inverter, and a transformer that transforms the usual voltage of maybe 1,000 volts to 20 kV, kilovolts. Then you have your transformer for your self-energy supply, and you have a grid connection in the switchgear. And why do I show you that? Because you see immediately the similarity with a PV power plant. It is scalable. You can build this one that was 20 megawatts, but if you buy the meadow behind, you can build 100 or 200. So the big discussion whether we are going to build pumped hydro or we build battery, the one thing that makes battery so attractive is, or the 3 things are, A, it's scalable. You can plan and build it in a year. Maybe it takes 2 years if it's a big system. The second is they don't last that long. That sounds strange because you want long-lasting assets. But an asset that's written off in 15 years gives me also flexibility in terms of planning. We know we have a very quickly changing energy market. We don't know what the amount of photovoltaics or wind will be in 2035. So I don't want to build a pumped hydro system that takes 10 years to plan, 10 years to build, and in 2040, I will have a system. Who knows what the market does then? And for investors, I'm very much speaking for the interest of my investors. They say, maybe for the time being, I built something which I can quickly erect and quickly dismantle. That's a benefit of this technology. And the third factor is, well, we don't pay for the price degradation. The cost degradation is financed by the automobile industry. So we have a big brother that has 10 times as much batteries in the market, and we profit from the learning curve that they are sponsoring the whole time. So that's the 3 reasons that battery storage has been very dynamic in the past years. And I want to give you a short history. It's only 10 years ago that the first 1 megawatt storage system was built in Germany. That quickly went to 5 a year later, and then 20. This is an example from my former company in the US, but also in Germany, Steag built 6 times 15 megawatts of frequency regulation. Eneco, the biggest storage system in Germany, 50 megawatt hours back then. Then everybody remembers the Tesla battery that was famous because Elon Musk said, oh, if you don't have it done by Christmas, you don't pay anything. And well, they had it done by Christmas. But there are also bigger ones now in California. And this is the biggest one in Germany at the moment, but not for long, definitely not for long. Because you see, we have 10 years that have been so dynamic and built up. And this is the system I just showed on the lower right. You see, they have driven down the investment costs to about 400 euros a kilowatt hour at the moment. And you see in total, they build beyond 3-digit megawatts and megawatt hours. Well, this number is 2 systems, and you only see the picture of one, but the 2 systems were built last year. And then you have maybe seen the announcements from EcoStore. You know, we speak about hundreds of megawatts and several hundreds of megawatt hours, no problem. Costs driving down to 420. Okay, one from the UK, 1,000 megawatts and 2,000 megawatt hours. So suddenly the sky is the limit. So the question is, what can you pay for? And that's what I want to go into from here on, just a map of You see, they're coming up like mushrooms in autumn. So suddenly everybody wants to build a few 100 MWh storage system. We are watching this and say, well, let's see who has the power to actually do it, but it's not a technical issue anymore. It's just commercial. So what has happened in the last years? You will be maybe surprised, maybe not. Who built the most storage capacity? And you can see, well, the blue one is the market I just talked about in the lower one, the dark blue. Don't know if you can see my pointer. I could also, don't know if I have a, no. So I just directed this way. So the dark blue one is the huge utility scale. Then the red one is the commercial industrial. It doesn't really take off, and I don't give it much chance to do that in the future. It's too big to be cheap. It's too small to be cheap, and it's too big to profit really as much as the home storage systems. But let's see. And the big driver is not commercial. The big driver is reasons when we ask people why do they buy a home storage system which is commercially completely not viable. Support the energy transition. I want autarky, which is nobody can do autarky with 10 kWh in a storage system. They speak about partial autarky, so it's a bit awkward, but they are trying to avoid rising energy prices. And when you calculate it, you find out the increase rate of power prices would have to be so big that in principle it's suicide because one is afraid to die. So people basically invest 10,000 euros because their electricity bill could go up by a few hundred in the future. Anyway, so that's what drives the market. And just to give you an example, this is more than the biggest pumped hydropower station in Germany. So if this continues, we will see a lot of storage, but not commercial, but private. Anyway, looking at time, I want to not bore you with too much of the market news. Oh, forgive me, these two more, and then I'm going to go into cost of storage. This is the Marktstammdatenregister, so the announced storage systems in Germany, and you see after the big amount, or this first build out in 2016 to 2019 with about 100 megawatts per year, you suddenly see big numbers, and when you look closer, you see it's mostly one developer of large-scale systems. So you see 300, 300, and 104 megawatts per system. Let's see if this happens. But yeah, so there is a bit of a gold rush going on. But also, if you look at the more conservative parties like BNetzA, saying in their Netzentwicklungsplan, Grid Development Plan 2023, they speak about 10 gigawatts in 2030, about above 20 in 2037, and then close to 50 in 2045. What do I want you to take away from this? There's something moving really quick, and at the moment, it's extremely interesting to see after the doom and gloom in the frequency regulation, we see a big build out in commercial storage. So you asked me the question, how do I calculate cost? And Oliver already showed part of it. So I want to share something about an expected cost degradation. That's data taken from BNEF, Bloomberg New Energy Finance. And you don't need to read all the components, but what I want you to understand is that the battery is only 50% of your project investment cost. So that is not the whole operation cost. It's only investment. What do you pay when you build it? And you see the battery is the red part. That is, of course, the most expensive component. But from a world in 2019 where the single component dominated the market, the price by somewhat over 50%, we are moving into a market like in the photovoltaics in the 2012 to 2015 time, where the main component is getting so cheap that the others gain weight. And suddenly the price degradation is not going as fast as the main component anymore, 8% per year, but rather somewhat less fast. And you will see it in my cost calculations in a minute, that this is also a natural Price limit. Transformers will not get cheaper anymore. Yeah, they are actually rising in price because copper and steel is going up. Ground is getting more expensive. Grid connections are getting more expensive. So let's see where this goes, but it's not going to be zero in the future. So, and this is, sorry to bring in a formula, but you're scientists. So I think most of you can read this, but let me read it out loud to you in detail so that we understand what this goes on here. LCOS, levelized cost of storage. It comes from Fraunhofer, so it must be right. Some use the notation that levelized cost of electricity is what is written down here. Because so far, levelized cost of storage was called whatever the storage system costs you. And usually we would subtract the cost of the energy that you take in and sell again, that this would be subtracted from the cost of electricity. And you would only calculate the cost of the storage system. I think, but this formula does include the electricity you buy to sell it again. So that is an important detail to watch out for. But what does electricity cost from a storage system? Well, you have to pay off your financial service, no, for the investment. But this is not all, and it's by far not everything. You have to pay for the O&M, but O&M here does also include asset management, market access, the person who or the company who sells your frequency service or sells your trading to make money from it. You have to pay that person, and also costs money. Then, of course, you have to buy electricity, and in the end, you have to recycle your battery. European Battery Directive, no way out. You have to recycle, it costs money. And you may say, well, I have expensive lithium and cobalt and whatever in my battery, but a lot of researchers are working to reduce the cost of storage, and then there's nothing expensive in it anymore. And then you need to pay for the recycling because there's no value in when you have mangan and maybe sodium ions instead of lithium ions. And then in the end, you divide by the amount of energy you have put out from your storage system, and you get the cost per megawatt hour discharged. This is also what Oliver said. I just want to add one thing. It's not always the energy you discharge that you get paid for. Like an uninterruptible power supply doesn't get paid for the energy it discharges. It gets paid for its power capacity. Or a frequency reserve power doesn't get paid for the electricity you discharge, at least not in the frequency service, but gets paid for service. So when you look at commercial viability, be careful. You may get paid for capacity, and the combinations were great, how Oliver showed it. So I would say, be careful, but for most applications, it's the cost of energy discharged. That's true. So I think if you take this formula for heat storage, I'm very interested to work with you. Yeah, losses are different, O&M costs. You get the electricity, or no, you get the heat sometimes for free, nearly free. Power is sometimes for free. So we can work together and work it out, because I'm very interested to learn what can you do in terms of cent per kilowatt hour. So I bring you just 3 slides of variations that tell you a little bit about how this formula works. And you see, if I only do 1 cycle per day, and you see here the cost for the battery. To give me, I have assumed 500 euros per kilowatt hour capex. We learned this can be lower. There could be 400, but it's very generic assumptions. You see, the battery is one part, but your total balance of system, grid connection, operations, losses, and also the so-called grid connection fee, Baukostenzuschuss. They're not negligible. Now, when you do 2 cycles a day, many of these are divided by 2. Not all, but many. The losses are not, you lose as much, but the Baukostenzuschuss gets halved because, yeah, you use it more. Excellent. But which application can give you 2 cycles a day? Definitely not PV integration. PV integration gives you maybe 1.4 cycles a day currently, but when you do it at home, you usually have just 0.7 cycles a day. makes it unpayable expensive. Yeah, like a home storage system with 30-cent storage cost is not unusual. Well, and if you can commercially monetize 3 cycles a day, well, then we're in business. Looking good. I give you another parameter which is really relevant. The ratio of energy to power. If I have a single hour system, yeah, I end up with 30 euros a megawatt hour, so that's 30 cents. But if I can build a 4-hour system, life gets more bearable. But you need to find a way you can monetize for hours. It's not so simple, but it's good news for long-term storage. And finally, I want to show you the effect when the battery has a cost reduction by a factor 2. Batteries used to cost about 200 euros per kilowatt hour or $200. Let's assume this goes to 100. I want to show you that it's the effect I already mentioned, that all these overhead costs, well, if they don't scale down, you come from 32 cents per kilowatt hour to 28. Not big. If you come from 15 cents down to 12 cents per kilowatt hour, interesting. If you would do that with hydrogen, most people with hydrogen don't calculate that way, but if you do that, it's twice as expensive. So I'm very positive about battery storage in the future because all the other options are really expensive too. And when you look at the pumped hydro, you don't get cheaper than that. With the old ones that are written off, you can get very cheap, but not with the new one. But anyway, happy to comment further. Time is running out. So I want to just give you one more slide with our view on revenues. I know that was Oliver's task. We are currently looking at single cycle spread in the day ahead market, not enough money to live. And this will not change in the future. We're looking at 2 cycles a day. Looks better, but not enough money to live. Will not get better in the future. What we look at is intraday trading. And we see that in the past years, since 2019, intraday trading would have yielded a factor between 2.5 and 4 more, depending on the number of cycles, than 2 days in the day ahead market. And if I look at my prognosis from different companies, well, mixed results. This is the cost you would have to have or the earnings you need. And we think that this is going to be bigger. Because we think that this ratio appears quite stable, and we think these you can be a bit more optimistic, but we will observe, and so I think intraday trading is the business of the coming 2 or 3 years. Then we have to see what the market impact will be. Okay. I thought I'm going to jump to conclusions, but there is one more thing. Trianel is publishing every 3 months, an index, which is exactly showing the volatility of prices in the short-term market, because we think that's the dominating market. And you can see 2022, we had a huge overshoot, but still today, the revenues from the short-term market are much higher than what used to be until 2020. So we are very positive about this market. On the upper right, you see the volume index. So we think that's going to increase. And now I want to, oops, sorry, Stephanie. I'm going to jump to conclusion in a second. Just to point out one thing, if you think stationary battery is the big deal, well, look at stationary batteries. This is the yellow part in the bottom and the red and the bright red. The actual biggest battery currently is being built on wheels. And this is by a factor 10 bigger than, so all I want to say is, if we're going to have 15 million passenger cars in 2030, you're going to have 750 gigawatt hours in the market with 165 gigawatt charging power. So if you want to look into this market, I strongly encourage you to keep watching how bidirectional charging, vehicle to home, control charging will develop, because it's a huge source of flexibility. But I'm happy to compare notes what thermal storage can do, what charging of the electric mobility can do, and then compare notes with what our storage systems can do. Okay, these are the let's go back. So many slides. What do I want you to take home? Decarbonization means fluctuations in generation. The prediction uncertainty of generation has recently outscaled the prediction uncertainty of load. So we are currently at a break even, more or less, and this is going to go big in terms of prediction of generation. Second means we will have excess energy. Negative residual load means we're going to have more than we need in that instant, so we need storage. Especially because project developers for generation don't know what their product will be worth if they don't have flexibility to integrate in the market. Then the scalable technology is battery storage, but there's other flexibilities to watch. Sector coupling, heat and mobility is very much important. Also, the generation of hydrogen, and I don't mean take hydrogen and make electricity from it again. What I mean is, instead of generating in a block, I can generate and somewhat go up and down in my hydrogen generation power. That's also a term, a way of flexibility. Before we lose all the listeners, I want to conclude really completely. Regulation is important, as you can guess. Storage needs would suffer from grid fees, etc. And you see the big growth rates. And I'm in favor of batteries because I think that's the one technology we can easily scale. And if pumped hydro comes in the future, happy to take the batteries away again and do different things. Thank you very much.
So thank you very much for your overview. I mean, it's a lot of information to pack in this time.
Yes,
I guess,
I'm sorry, 33 slides for 20 minutes.
Don't worry, don't worry. I think we could have made maybe 10 more seminars just specific to this. Maybe there should be a rethinking of a different exchange platform regarding economic, because I think we all can, as I said, the thermal sector, as well as the power sector, we can all learn from each other, and also the molecular sector. I want to make artificial fuel or whatever. There should be a good exchange, and we should know that we all talk about the same parameters. So I think it's important to take time. Let's see. So if there's a question, we have time for this as well. You can write in the chat or ask directly. Maybe directly asking would be quicker. Okay, so
I just want to conclude. You know, I know it was a force read, really a fast presentation. What I wanted to achieve is wake you up in terms batteries are going big these days, and let's join forces and calculate what's the flexibility costs, because nobody cares in the end if it's done in a heat storage system or in a battery or by cars or by hydrogen generation. But what I'd be really interested to learn in exchange is, how is your view on flexibility market? Yeah, sector coupling. And let's put, I have a student I could put on this and say, if you use the same framework and for the heat storage, because as a municipal utility company that we are, heat, like outphasing gas and generating heat supply is a big topic for us, and we are happy to learn what heat storage can do for us.
I think I fully agree that there must be a contact. So regarding flexible sector coupling, I mean, we are here on the energy storage TCP, and there is now a task regarding, I think it's just finished right now, regarding flexible sector coupling, and I think there is something new to come. But I'm happy if you're in touch. We can stay in touch, and I can forward to the people who are just closing something is even better, making something new. And I guess this is the the right way to go. So I fully agree. There must be a good, working together, like the intersection of understanding the system, and especially if you're very close, not even so, also the theory behind everything is quite important. So I would say, even so we are over time, there's a question now. We can answer this question.
I would say batteries will never replace hydrogen. The thing is, batteries, from the way they're built, you could have redox flow batteries maybe for 12 or even 24 hours, and if it's for 2 days. But the batteries will stabilize your system, and they will drive down power prices in everything up to 12 hours or maybe even 24 if you have a redox flow. Let's see, organic redox flow, perfect. Yeah, heat storage can contribute. But what batteries will not do is secure supply for Dunkelflaute, the dark and calm periods. For that, you need something that can last days, and which is basically not limited by capacity. And this is going to be anything that is made from power and water. If it's then methanol or methane or hydrogen, pure hydrogen, I don't care, but you will need a gas power plant. So it's absolutely right that the Bundesregierung, the federal government, is advertising power plant ramp up, because that is the single most important technology for supply of electricity and heat, if you can, in a period of 2 weeks, 3 weeks, that occurs every now and then. Every few years, you have 3 weeks of calm and cold weather with clouds. So yes, biomass can help, but not supply everything. Also run off hydrogen, water power plants. But yeah, you need both. Absolutely.
Yeah, so just for completion, this was the question in the chat, if the battery can completely replace all gas power stations, power plants. So yeah, something more?
So thank you for the opportunity, and get in touch. Feel free to contact us. We do earn money with projects, I admit this, but we also have a favor for doing the projects that make sense and for the total energy system. And this should be the guiding line. Does it make sense for the energy system? Because then it's sustainable, and a term also commercially sustainable. And so that's what I hope for.
Yes. Yes.
Thank you very much.
Thank you too. Thank you too on both. So many thanks. I can just repeat, as a person not really with a background on economy, I'm very happy to have got these insights and to understand a little bit more what to think about, and especially for the battery sector. And yeah, many thanks for listening, and hopefully see you next month. Bye.